Hello, my name is Sandra, and welcome to my channel From Lack to Legacy. On this channel, we're all things money, investing, mindset, mixed in with a little bit of travel and live a broad lifestyle, because that's what we do. I need you all to tell me if the sound is good, because we got to get into it. First of all, you all know we're doing a no spin, low spin challenge, and we've carried it over for the second month. And so a part of my, you all see that StreamYard symbol logo? That's when you're using the free one. So I'm using the free one. It's one of the things I cut back. I had no idea, y'all. I was paying StreamYard $45 a month and didn't even know it. Sips tea. Is it good, Marilyn? Okay. So that was one of the things it's so much for us to talk about. So I'm going to slow it down because I really do want to chat today. I want to get some chatting in before we jump into the content of it all. How are y'all doing? First of all, how y'all doing in America? Because it looks wild from here. It looks so wild. Hey, Venus. Hey, Mara Love. None of this happens without Mayor Love. You all, that's our moderator extraordinaire. So you all make sure that when you come into the chat, you greet Marilyn. She makes all this happen. I promise y'all. Hey, Rita. Rita's a part of our 1,000 Black Women Brokerage Account Challenge. She's in our learning community. We meet twice a month. Message, is that Message with Sunshine? Okay. Long as we in there, y'all. Long as we in there. Everybody, if this is your first time here, welcome, welcome, welcome. If you've been here before, you already know the drill. Hit any of them buttons down below. Any of them. It all sends a message to the YouTube algorithm that somebody is watching. And so when that signal goes out, it will send this content out to like-minded women. So do your sister a favor. Like, subscribe, share the channel. Yes, and we're going to get into it tonight. We have vowed not to even mention the name. So the stump tariffs are wreaking havoc. Did we expect anything else? Were we expecting anything else? I wasn't. I mean, it's been chaotic. I don't know. Has it been 100 days? It's been chaotic all 100 days. Child, if a man came into my house and created chaos in the first 100 days, you know he would be gone. What? You've been here 100 days and it's been 100 days of chaos. This relationship ain't going to last long at all, at all, at all. So we're going to be delving into, exactly, just so we're all on the same page, what is a tariff? I think you all already know. But if you're catching this in the future, we want to just get everybody on the same page. And we're going to talk about how those tariffs are impacting our bottom line, our 401ks. That's what this is all about. This is straight chaos. And Latanya, that makes it hard because when it's chaotic like that, it is hard for companies to set guidance. You all know we're coming up on earnings season where all the companies, talk about their earnings, what they have accomplished and what they expect to see in the coming quarter. And so people kind of count on those earning reports to get a sense of where the company is and if they want to further invest. I don't know why this thing is up so close. And if they want to invest. So a lot of CEOs are postponing their earnings reports, meaning like every quarter they would come on and say, well, this is what we've done and this is what our projections are for the next quarter. They're saying, child, we can't tell. We can't tell because one day China is 125, the next day is 145. And I meant to check right before I came on because I don't even know. What is it? I don't even know. Is it still China 145? Whatever it is, it's chaos. And so when things are like that, I think being cautious is always, is always prudent. It's just prudent to be careful, but we don't want to be so careful that we're locking ourselves out of the game. So, hey, Sam. That's Sam. Black Women Build Wealth is my sister, Sam. She is another sister that talks money. You all get over there and support her channel, please. Hey, Zakia. Hey, sister. My other Exodus travel sister. Hey, Maya. Maya Spikes writes, love Maya. I'm not sure if Maya has her channel up yet, but Maya is a wonderful writer. And so you all can find her across social media as Maya Spikes writes. So get over there, support my sister. Hey, Kiki. Mary Love keeps this girl, Mary Love keeps everything in order. She keeps the train on the track. Hey, Tanya. And hey, Latanya. Latanya is a part of our 1,000 Black Women Brokerage Account Challenge as well. We meet twice a month on Wednesdays, and it's Black women in here talking about our money and things that we need to do. So let me just get that out of the way. So twice a month we meet. We're currently reading the book by Tiffany Alici, How to Get Good with Money. We are still engaged in our, let me move this out of the way. We're still engaged in our 1,000 Black Women Brokerage Account Challenge, but we're still engaged in our low spend, no spend challenge. So that has us always mindful of where our money is going. And we talk about investing. We use primarily two platforms, Schwab and Fidelity. So if you want to become more skilled at managing your own money, I'm telling you what you're waiting on. I put the link at the top of the chat. So let me see if I can find it. There it is. And then I'll run it across the bottom so that, let me go ahead on and run this banner. Let me see what we doing here. There we go. All right. So y'all got it. Y'all got all the info in the intel. Let me get that out the way. So yes, if you aren't a part of that challenge, you want to become a part because we talk about these things all the time. And so I'm going to be getting into that. And I just need y'all to help me and tell me which one of these I'm going to add this slide to the stream. Can you all see that? Just give me a thumbs up in the chat if you can see. It says protect your coins. It's fun over here. Girl, we look, money does not have to be scary. Although I know this is a scary time, honey. This is a scary time. But it doesn't have to be scary. And you all know because I really am conscientious and I want to make sure that I'm giving you good information. Thank you. Hey, Venus. Thank you. Hey, Chef. Glad you could join the conversation. Hey, Poetry. Hey. All right. I'm glad everybody is here. Don't forget, like, subscribe, and share. And I'm going to just switch over to my notes. So if my eyes look crazy, y'all, that's because I am reading my notes because I don't want us to miss anything. So the last time I checked, the tariffs were at 145% on Chinese imports. That was up from 60%, then it was 125%, and then it was up to 145%. And there was a 90-day suspension on tariffs for most countries, most of the other countries, reducing them to 10%. But major sectors like steel, aluminum, and auto parts are still going to get hit hard because, a lot of that stuff comes from China. So if there's anything that is being imported from China and we use that and like what part of our economy in the US isn't touched by Chinese imports, you're going to possibly see some price increases. I think importers and businesses that import those goods have a choice. They can either pass that cost on to the consumer or they can absorb that cost. Now, what do you think greedy business people going to do? Do you really, really think that they're going to absorb those costs? They are not. I mean, some may try to mitigate some of it so that consumers aren't hit so hard, but for the most part, the consumer is going to pay that. So it was like a flat out lie. How many of y'all know? When you heard it, did you know it was a lie? Like, we're going to make China pay 145. China's not paying that. they're going to be charged that tariff, but they're going to pass that on to the people who are importing, and the importers and the businesses that import goods from China that they sell to us are going to pass that cost on to us. It's no different than when he said he was going to make Mexico pay for the wall. Now tell me you all knew that. I mean, we all knew that was a straight up lie. It's just no other way. I still have some remnants from my childhood. How many of y'all couldn't say lie as a kid? I couldn't say lie as a kid. I still stumble over that word sometimes. But a lie is a lie is a lie is a lie. There was no way in the world Mexico was going to pay for a wall, and there's no way these other countries are going to pay these. They're going to be charged those tariffs, but they're going to pass that cost on, and ultimately the consumer is the one who foots the bill. So let's get clear. That tariff is going to definitely, all those tariffs are going to affect us in one way or the other. So how are y'all feeling about all of these updates? Type tariff in the chat. If this news caught you off guard, or if you're already adjusting your investments, just type tariffs. Terrible tariffs. They're terrible because there's no way to escape it. There's no way. Yeah, it is. It's a cuss word. It's a straight up cuss word. And I'm sure some of his constituents are they're going to feel the pinch just like all of us. Nobody's going to escape. Well, the ultra wealthy may escape because, this is all rigged and set up. And forgive me. When I say rigged, I just think if you're not playing the game, you're going to get played. Point blank, period. And how do we play the game? The only way you can play this game is if you know the rules. And how do you know the rules? You have to get educated. So, we have to be educated. We cannot. I got to go all the way back to all the way back to the first slide, y'all. We cannot be out here and not be educated, folks. Point blank, period. So one of the things that we can do to kind of protect ourselves in all of this madness is to maintain a diversified portfolio. So if you are not in the stock market, then you probably are like, what's the big whoop? Because you aren't going to feel it on both fronts. You will feel it in your pocket. You'll feel it at the grocery store. You'll feel it at the gas pump. You will feel it, whenever you're purchasing something. And God forbid you buy anything from Temu, Alibaba, and Shein, because they're shipping straight from overseas. So those, you will probably see you'll see it there. You'll feel it there. But if you are invested, if you have a 401k that is invested in the stock market, if you are an individual retail investor like myself, if you are a trader, you're going to feel it on that front as well. How many people noticed a dip in your portfolio? Me and the kids. How many people were shooketh? If you were shooketh, let me type shooketh in the. I was shook. I was shook just like everybody else. I mean, I am not immune. I was shooketh. That's when I knew media was in on deceiving America. Yes. Are you kidding me? We got to talk about that. We have got to talk about it. You want to know why? Because I get my news from a totally different news source. It is unlike what you all see. So I have to go out of my way to get CNBC. I have to go out of my way to get US news. I am listening to the BBC, Al Jazeera, and Reuters. There's a whole different tone when they deliver the news. When I watch US news, I can see why everybody's afraid. The media is definitely in on it. Who said that? Oh, Kiki. The media is definitely in on it. They're as big a part of play. They're as big a part of the play as any of the bad actors, because they perpetuate this fear. And when people are fearful, you make bad decisions. When the markets are uncertain, everybody knows this, the stock market hates uncertainty. When the stock market is uncertain, you see these dips. Yeah. Yep. Child, I sure. Okay. I'm trying to tell y'all. Okay. So we all saw it. But what I'm hoping is that you didn't get so afraid and shooketh that you made a rash decision, because that is going to be the thing that they're counting on. I call it the shakeout. If there are any traders in here who have traded for a while, you'll know the market will do some funny things, and they will try to literally shake you out of a trade. And it's no different with investing. They will try to shake you out of your position, because when folks are fearful, real investors, real long-term money-making investors and brokerage houses, they understand when folks get fearful, they start to sell. They start to make moves that aren't the wisest, and that's when they swoop in. So we're not even participating in that. We see it, but we're going to back away from the TV, and we're going to maintain a diversified portfolio. And diversification across asset classes can help you mitigate risk associated with market versatility or market volatility. Y'all know I slept in my contacts. That's a whole nother story for a whole nother day. But how can we mitigate some of this market volatility? Not only do you want to be in the stock market, but if you can, bonds should be a part. This is where people start moving to more safe or less volatile investments. Bonds might be a part of your portfolio. You might move to more defensive sectors, sectors that aren't as affected. You know, tech is going to, of course, be highly affected because a lot of their parts come from overseas. But you want to start looking at utilities. And hey, first of all, let's get this out the way. I do not give financial advice. I watch a lot of YouTube University. I read a lot, you all. I study. So this is me talking to my sister friends. Listen, do not take blanket advice from anybody on the internet. I don't care what I hear. I don't care what the source is. I always double check, triple check, cross reference, and you should do the same. But these are some conventional wisdoms that I want to share with you, that when things get funky like this, you don't have to just sit and watch. There are things that you can do. There's some defensive postures that you can take, and one would be maybe moving to some more defensive kind of sectors, utilities, healthcare. Because, honey, let me tell you, healthcare gonna healthcare. It doesn't matter what's going on in the world. They don't have to too much worry. How about consumer discretionary? Toilet paper you're gonna need toilet paper regardless. Toilet paper is not being imported, child. It don't make sense to import toilet paper. So toilet paper is all, who is it? Procter and Gamble, those kinds of companies. Some of your tried and true aristocrat stocks, those kinds of things. So you might want to start to look at how your investments are allocated. Again, move across asset classes. That could be, you might want to have a little real estate. You might want to keep a little cash on hand. For sure, we should be storing up a little cash, because buy the dip is conventional wisdom, but how do you know when the dip is over? And we don't want to be out here trying to catch a falling knife, which is the market is going down, you jump in, you throw all your pennies in the pool, and it continues. I personally, y'all know I'm very risk averse, so I'm going to be waiting to see if there's going to be an upturn, if things are going to settle down, and then, but keep a little money on the side, so when it's time to get in the game, you have something, you got a little kindling to work with to start, get it going. Also, you all know I'm a dollar cost average kind of girl. We just continually are putting the same amount into the market, up or down. You're going to catch some high, you're going to catch some low. So that's an overview. Let me just get here to the chat. Let me see. Somebody said it was more like a plunge. It was not a dip. Poetry. Yep. Afraid to look. Sometimes, sis, it's better not to, especially if you are a long-term investor. It is better if you know that it's going to make you antsy. Don't look. Don't look. I look every day. I look every day because I'm a voyeur like that. I just want to see the shenanigans. When I'm looking, I'm studying. I'm watching for patterns. And we've seen these patterns before, that when the market hits lows, if you look over time, and I'm talking about long-term investors, and we've got to talk about that. Long-term investors are in it 10 years, 20 years, 30 years down the line. We're not worried about these little blips. Of course, they hurt. They look ridiculous. And we all know it's a game. But we're in the game playing just like the big boys are playing too. I'm going along. I'm riding and laughing all the way to the bank right along with them, because I do look at mine. But I'm looking and studying these patterns to see, how stocks recover. I'm looking in that way. So yeah. Yeah, somebody said it's all lies. You know it is. It's all make believe. But girl, if you already know who the Wiz is, you know what I'm saying? If you've already seen behind the curtain and you know how the Wiz works, you can better prepare yourself for all the shenanigans and the nonsense. Somebody said all diversify media outlets. Yes, Katrina, that's my buddy. Katrina and I talked about this. And one of the things that we brought up in our learning community is that it is wise to diversify your news source. Because if you're only listening to CNBC, if you're only listening to US outlets, in particular mainstream ABC, NBC, CBS, girl, they need clicks. They're giving you they need clicks. They need you to be upset. They need you to be angry. They need you to be afraid, because that stuff sells. I swear to you, turn on Reuters, turn on Bloomberg, turn on the BBC and Al Jazeera. Even their tone is different. And you can get most of those media outlets somewhere on the internet. That's where our news source is. Of course, I can't watch Malay news because I can't understand the word they're saying, but we have international channels here, so I can watch. I rarely watch mainstream US media because it's our girl, they in it, too. They in it too. That 1% will become even richer. That's the name of the game. We know that. Yep. Fear mongering is real. Yep. Emotions are negative, correlating with wealth building. Yep. Who said it? I'm sure it's Warren Buffett said it, that when there's fear in the street, that's when they go shopping. When folks are afraid, that's when the wealthy take advantage. They swoop right in. I did some buying during the dip. Yay, new one. Good for you. Drop in the chat. Tell us what you bought. I wish I had some extra to buy at the dip. I'm dollar cost averaging, but would have been nice to buy a bit extra when there's a sale in the market. Sis, do what you can. The fact that you are dollar cost averaging in, you are buying the dip. You're going to catch some of those if you're, doing it weekly, or if you're doing it monthly. I like doing it weekly because you stand a better chance of catching it when it's low. If you only buy once a month, you give yourself one time out of the month to catch something on sale. And that's a simple adjustment that you can make. If you're right now investing once a month, switch it to investing, break that up into doing it weekly, so that you run a better chance of catching something on the low the more times. And then my good sis over Lisa J Stocks, she was investing $10 a day. So one of those days you're going to catch it and get it when it's on sale. Girl, I fell asleep with my contacts in my eyes, child. Yeah, Marilyn said, place a QQQ before your question if you have a question. I'm riding the waves. Yes, Alinka, good for you, girl. That's what I'm saying. We have to be smarter. We cannot allow the fear to rule us. And big up yourself. That's my sister, Winsome. Hey, sis, my beautiful sister. If you all need to get your lives right, y'all get over there and see Winsome, honey. She will have you believing in yourself. She does a visualization clinic, all kinds of things for better living. I'm telling y'all. I know some of the coolest women. I'm just going to roll through our comments. It's hard not to look at the market activity. I'm not looking at my retirement account because the market is going to do what it's going to do based on politics, consumer fear, etc. Absolutely. So you got to know who you are, as an investor. You got to know who you are. If you are the kind of person who gets shook to the point where you might be tempted to sell, then don't look. We've got to all agree on this, that we're in this for the long haul. If you're doing something that's shorter than a year, you're basically trading. That's a whole different beast. That's some short-term investing because you want to generate profits so that maybe you can put that into your long-term investments. But we're talking about investors tonight. And what are some things that you can do to protect yourself against this tariff madness? And how can you weather this storm? And one of those is to make sure that you have a diversified portfolio. And one of the other things that you can do too is do some self introspection. Understand, are what's your risk tolerance? If you know that you're going to be skittish when looking at it, then don't look at it. If you know that you're going to need that money in the short term, meaning you might need that money in less than a year, then you might want to move that money out of the market and maybe into something a little less volatile like bonds, maybe a high yield savings account. But you should have all of those. You should have a high yield savings account anyway. We're going to get into all of that stuff. I'm getting ahead of myself. Let's see. Yes, who just brought Procter and Gamble? Because baby, folks gonna need toilet paper. They're gonna need soap powder. Soap powder, you know I'm old. They're gonna need dish detergent. They're going to need all of those consumer goods. Point blank, period. People are not gonna stop buying that stuff. SCHG during the dip, good. QQQM, you know I love QQQ product, period. When people are greedy, be fearful. When people are fearful, be greedy. See, look, this is why you need to be in on the learning community. That's Latanya. My sisters know. We already know. It doesn't make it easier to look at. Maybe not, but at least knowing that your strategy, your long-term strategy that you have in place is wise. It's wise to just ride it out. Do not be one of those people who gets shook and starts jumping all over the place. That's my sister Winsome's visualization clinic. Y'all better click on that link and go get your lives in order. What is dollar cost averaging? Good question, Alienka. Dollar cost averaging is where you commit to, let's say, I'll just give you an example. Let's go with SCHG or SCHD. SCHD is a dividend fund. SCHG is a growth fund. Both of these are Schwab funds. And let's say you are investing for dividends, because that's another thing that you could do during this time. Maybe get some dividend ETFs or some dividend stocks into your portfolio. In a dividend stock or dividend ETF pays you quarterly, regardless of whether the stock price goes up or down, generally speaking. And so dollar cost averaging, let's take SCHD. You set up your account with either Fidelity or Schwab, and you say, I'm going to put in $100 a week every week of the year, no matter what. It doesn't matter if the price goes up or if the price goes down. I'm going to do that, and you don't change it. It goes in. So sometimes you're going to catch it when the price is high. So it might be $200 on the first of the month. Next week, maybe the price of that stock has dropped down $20. The next week when you purchase, you're going to get it at that lower price. So over time, it will average out in your favor for the most part. In our learning community, we often have this conversation. Is it more profitable to dollar cost average in, meaning set your investment to purchase at the same time, at the same amount, no matter what? That's dollar cost averaging. Or do you want to lump sum into an investment? And there are benefits to both of those. So if you are more risk averse, or if you don't have a lump sum $5,000 at your disposal to just drop into the market when you believe that it's low, the price is low, like buying the dip, then you might want to dollar cost average in. It's a strategy I like because I don't have the stomach. While I can watch it, I just don't like buyer's remorse, you know? And so if I'm buying $100 a week, I'm okay with that. The thought of dropping $10,000 into the market at one time for me would keep me up at night. That's lump sum investing. And so I think you have to know who you are. Both of those strategies are valid. Both of them are will serve you well. There's some research that suggests if you lump sum in, if you get it low, if you catch it in a dip, you'll do better over time. And so if you have the stomach to drop 10,000, 20,000, 30,000 at a time, pick your time, be wise. You don't want to ever buy high. We always want to buy low. Go for it. But dollar cost averaging is a strategy for investing in a particular stock or ETF or any equity where you use the same amount at the same time and you leave it and you don't touch it. How do tariffs impact cryptocurrency? I don't know that those two have anything to do with each other. And so when I don't know something, I just say, I don't know. I don't know, because y'all know I don't fool with crypto like that. I really don't. I have some Bitcoin. I don't even watch it. Bitcoin gonna do what it's gonna do. I don't know. Does anybody in the chat know how tariffs affect cryptocurrency? I don't know. It's cryptocurrency for me is still like the Wizard of Oz. I don't know what's happening behind that curtain. And I'm gonna tell you this. Warren Buffett, to me, I bow down. He said, do not invest in things that you do not understand. And since I do not understand cryptocurrency on a level that I feel comfortable talking about it, I don't even fool with it. I bought some Bitcoins years and years and years ago. I just let it sit. I don't know. Katrina, I don't know. Maybe that's something we can bring up in our learning community. How do these tariffs impact cryptocurrency? It wasn't even on my radar, but I do know that my Bitcoin is down. But it had been going down anyway. It had surged a couple months ago. I think we had hit a high. And so I don't know. I ain't gonna fool with that one. Iron sharpens iron. Oh, yes, it does. I use soap powder too. Warren Buffett said what he said. He said what he said. Y'all better get over there. I'm telling you, if you aren't investing, I want to encourage you to at least consider opening up your brokerage account. At least open it up. And you can open up a Fidelity account, a Schwab account. I want to say, I don't know about Vanguard, but I know those two you can do with no money. So it doesn't cost anything to open it. And if you open up a Schwab account, they have a platform, Thinkorswim, that allows you to paper trade where you can do practice trades. That's why we use it, because we use both in our learning community. Fidelity, most of us do our actual investing on Fidelity's platform because it's more versatile. It offers you more options. But we also have, Fidelity doesn't have a paper money simulator where you can practice trading or practice investing and, just going through the motions, whereas Schwab does have that. So we kind of vacillate between both of those. Hey, Cheryl, that's my sister. Hey, Chica, how's Bali? My travel sister's out here doing it. All right. Yes, there is our bi-weekly. That's the link for our study session. Lump sum versus dollar cost averaging can be based on your risk tolerance. Yeah. And I know me. I would be ill if I dropped some money and that thing dropped. I would probably lose my mind. But if I put $100 in and I see, oh, we're down, 5%, 10%, that doesn't shake me as much. Even though I know in my heart and in my mind that the market is going to recover over time, you just have to know yourself. And I think when you are less afraid and you're more informed, you will do better. You will be able to steady yourself. How do you know when the market is low to buy during the dip? Is there a way to set a notification on our brokerage accounts? Yes, there is. You can absolutely go in and set up an alert. If a price gets to, all this information is free, y'all. All this stuff is on Yahoo Finance, Investopedia, all of them, Bloomberg. You can go and let's say you have a stock in mind. Let's say VTI, you want to get ready to dollar cost average into VTI. They will tell you the 52-week high, the 52-week low. You can actually see what it has returned every year. So you can kind of gauge if it's at a high. And I don't like to buy anything at an all-time high. I mean, you already know if you're buying at the all-time high, there's going to be a pullback. So you already are kind of setting yourself up. Nobody knows exactly when the bottom is going to be. Girl, if we knew that, we'd all be rich. Nobody knows. And so that's why I do like dollar cost averaging in. This way, I don't have to worry about trying to time the market, whether or not it's, is this the lowest low? And another strategy is to kind of wait for that pullback, that dip to turn around when you see a market start to bounce back. Well, but then you will have missed the lowest of the low. So for me, dollar cost averaging in is just easier. It's easier. Yep. Like, subscribe, share. Y'all know what to do. I Googled your question and I saw articles from the Motley Fool and Yahoo about tariffs. Yes, yes. Y'all know what to do. We empower folks here. I don't take anybody's word for anything. I research everything. I watch a lot of YouTube University. I talk to folks at Schwab. I talk to folks at Fidelity. And as soon as I get off that call, you know what I do? I'm Googling, I'm AIing, I'm searching, and I'm cross-referencing that information. If I hear something 3 times from 3 different sources, then okay, I might rest in that. So the first thing you want to do is make sure that you maintain a diversified portfolio. Drop a green leaf in the chat if you believe your investments are adequately diversified. You already got your stuff together. You've got some crypto. You might even have some gold. You've got some real estate, whether it's tangible real estate or if it's a REIT, which is the real estate investment trust. That's an ETF that holds real estate holdings. Or you've got maybe an ETF, an index fund that's a broad market fund. Maybe even got some bonds. And Katrina, whom I just absolutely adore, she's a sister in our learning community. We're going to be talking about bond laddering and how that can play a part in your portfolio. And so if you don't know what bond laddering is, honey, you need to be getting in here so you can understand this stuff. When I tell y'all 3 years ago, you could have said any of this stuff to me, I would have just looked at you, my eyes would have rolled back in my head like a cartoon character. I didn't know what that. All I knew was to invest in my pension thing and put a little money aside. That was all I knew. Fast forward 3 years later, we can have intelligent conversations about money. That does not happen by accident. We study, we talk to one another. I do not know everything. I am not a financial advisor. I am a retired teacher turned financial literacy advocate. I'm an advocate for financial literacy. I like to share resources. I share what I learned. The sisters in the group, they share with me what they learned. They already know when I don't know something, I throw my hands up. I don't know. But we could find out. I bet you next week we'll know. I bet you in 3 months we will know. Yeah. Green, yes. All but crypto and REITs. I'm learning about these. Good for you. Good. Y'all drop those. If you feel like yours, if it's not, just tell us what you're currently holding, if you don't mind sharing. You all know what I'm definitely a simple, my portfolio is basically 3 to 5 investments. I have a broad market ETF, VTI. I have a dividend ETF, VYM. I need to add some growth in there, but for my growth, I have NVIDIA, Taiwan Semiconductor. What else am I holding? I have to look at it. Oh, and Palantir. Yeah, I see, to be perfectly honest with you, I don't even look at it. But the truth is, I bought those so low that I'm still in the green with all that madness. I bought Palantir and I tell everybody when it was $17. Palantir is somewhere, I know it's above $60 a share. I don't know, so I don't worry about it. I bought NVIDIA when it was so low. I don't worry about it. I bought NVIDIA before the stock split. But if you adjust for the stock split, I bought it at about $50 a share. So, if it dips down under 100, as long as it don't come down in that $60 range. But even so, so the deal is You give yourself the best chance to succeed when you can purchase these stocks and ETFs at the lowest price possible. Yes. Target date funds with Vanguard, ETFs with my Roth, also Vanguard, and now some separately. Okay, you have some individual stocks from the Magnificent Seven. Okay, sister, I am not a financial advisor. I'm just going to tell you, look into those target date funds. Target date funds are like one size fits all. And so they aren't really tailored for an individual, but they're better than nothing. One of my beloved family members also has a target date fund, and I have been trying to counsel her into moving that into something where you have a bit more autonomy, where you can pick and choose. But like, look, y'all know I'm straight from a Baptist church. Like my pastor used to say, child, it's better to be in church than out of church. Now, ain't nobody saying you got to be sitting close to Jesus, but it's better to be in the market than out of the market. So the fact that you have that target date fund is a plus. You are miles ahead of those who are sitting on the sidelines, sitting on the couch, that don't have anything invested. But as you become a more savvy investor, you want to look at that target date fund. Could you possibly structure something on your own where you could see a better return? Let's see, my portfolio is ETF stocks, no bonds. Would love to take some more time to learn about REITs. Yes, real estate investment trust. I think O Realty is a big one that's pretty popular. But yes, you definitely want to look that up. I see y'all out here, Apple, Microsoft, Nvidia, and Google, and y'all need to look at these. These are undervalued. I was just reading yesterday, all of them, Google, Amazon, Nvidia, and it might be Apple. If y'all don't have to take my word for it. Go right over right now, pull up another tab, and just go to Investopedia or Yahoo Finance and ask the question, is Google currently undervalued? Is Nvidia currently undervalued? Pick one of those Magnificent Seven, anything you like, and just ask, is it currently undervalued? That's what we want to buy, bargains. I'm only interested in FXAIX. Oh, look at you, Mimi. I love it. Yes, yes. I love hearing this. When y'all talk money, I get excited. I'm not diversified enough in my 401k. I have index funds and ETFs that are too tech heavy. Yes, and not enough bonds and cash. I get it, sister. I'm with you. I'm working on that part too. And I don't know. I'm risk averse, but I don't know if I don't know if I'm feeling that skittish, because bonds are certainly safer. If you don't know what a bond is different from a stock or an ETF. When you buy a stock, you actually own part of the company. When you buy and purchase an ETF, you own a portion of that fund, and you make money as the price appreciates. You make money if they pay a dividend. A bond is very different. A bond is where you're actually lending money to either the government in the form of like treasury bonds, or corporate bonds. That's where you are lending money to a company, or municipal bonds. You may be lending money to a more local level of government. And while they use your money, they pay you a yield, a bond yield, or they pay you interest, and they can pay that quarterly. And there's some other intervals. But at the end of that bond, when it expires, you get all of your initial capital back, and you made, the little juice while they were holding your money. And so bonds are somewhat safer because they aren't directly affected by the stock market volatility. And so they're a little less volatile, but the return may be a little lower. So people, as they become older, like to include bonds in their portfolio because they're less volatile. Oh, Bali is wonderful. Aren't we just out here living our best lives? Yes. Yeah, I got it under $50. Okay, Nicole, SDHD, girl, you got some of my favorites in there. Okay, so you looking pretty good. You've got SDHD, that's a dividend fund. VTI, that's a total market. SCHD, you got some growth in there. Okay, I see you with your old realty. You got a REIT up in there. Okay. Yes. And it's as simple as that, you all. So if any of this sounds foreign to you, you're like, what are all these ticker symbols? And you don't know what they are, y'all better come over here and get with us. I did. If you, she could have flashed that to me last year, I'd be like, girl, I don't know. Let's go have some margaritas. I don't know. But we know now, and we will never be locked out of this game again. I am telling y'all, there's a wealth exchange happening right under our noses. So don't be that girl. Don't be that girl that gets locked out again. Y'all, every now and then you have these major pullbacks like this. 2008, the financial crisis of 2008, you had a worldwide pandemic where the market dropped so dramatically. Those were perfect times for you to get in, and then you sit and you wait. And so now we got this tariff madness. Child, please. And that's why I say it's all by design. They know what they're doing. They're letting their friends in the game. He is doing this. It's all market manipulation. Y'all know this is my Lord Jesus, because I don't need no trouble from the government. I don't need nobody looking over here at me. But I'm telling you what's real and what's true. This is all market manipulation. That's my humble opinion. I believe there's some insider trading going on. Y'all know them people knew what was going on. They knew this was going to happen. The rich understand how the game is played. So when there are major pullbacks like that, you want to be ready. If you don't have a lump sum and you're not sitting on a pile of money to jump in and take advantage of it that way, dollar cost average in. It does not matter. Start with your $5. With Schwab, you can buy slices of stocks in the S&P 500. You cannot buy slices or fractional shares of ETFs, but you can start with $5. Did you hear me? There isn't anybody under the sound of my voice who shouldn't be in the stock market. What are you, $5? You're not going to even miss it. If you go over to Fidelity and open up an account, you can invest in ETFs. They just have a whole plethora of products that you can invest and buy fractional shares. You don't even need $100. It's free to open the account. You can start investing with as little as $10 through both of them. And see, my sister's out here. Hey, coach. Coach is out here telling y'all SCHG, VYM. You got some of my favorites. SCHD. We got Fidelity funds, Vanguard funds, and Schwab funds. We're all right there. Easy breezy. VTI, broad market, VOO, S&P 500, the MAG 7, y'all know that. FXAIX is a mutual fund. It trades a little differently, but it's a wonderful, listen, I don't give no financial advice, right? Because I'm not a financial advisor. Y'all not going to have the FTC, the SEC, anybody looking for me. But the sisters out here telling you. They telling you what they doing. Yeah. We in here together. Y'all get in here and join these study sessions so we can talk real money together. You know, we got like an hour and a half at best on this stream. So let me hurry up. Let's keep moving. All right. So the next one. So we're going to diversify our portfolios. And then another thing that you can do during this time, we kind of touched on it, is focus on defensive investments. If you're just starting out, and you know, if you are looking to maybe mitigate some of the volatility, healthcare. Folks gonna still go to the doctor. Stop playing games. Utilities. People are still going to need lights, gas, water, consumer staples. These tend to be more resilient during economic downturns. And if you aren't aware, there are 11 sector ETFs in the stock market. I want to say utilities is XLK. And the rest of them, I don't know what they are. I don't know what the ticker symbols are, but there are 11 sectors. So you don't even have to pick one utility stock. You don't even have to pick one stock and consume. You don't have to pick one healthcare. I forgot what healthcare is. You all, somebody, if you know the tickers for the 11 sectors, somebody drop the 11 sectors in the chat. I would do it. I could pull it up. But these are all things. I'm giving you another resource. Go to Investopedia and just Google it. Just search, what are the 11 sectors in the stock market? And they're going to lay them all out for you. Each one of those sectors has an ETF. You do not have to be a rocket scientist to get into this. You could start dollar cost averaging into a utility ETF, a consumer staple ETF, and a healthcare ETF. I'm not giving financial advice. I'm just saying. I'm planting some seeds. I'm a Black woman out here planting seeds like Johnny Appleseed. I'm just dropping seeds. Hopefully, my sisters are listening because I don't want us to be left out. I really don't. And at the bottom, you all, I have attached articles and resources that back this up. I am not just talking off the cuff. I had to do the research. Listen, I taught for 30 years. Do y'all think the teachers in those classrooms know all that stuff? We do not. We do not. Teachers are very adept at getting information, finding resources, and sharing them. That's all we do. That's what I do here. I find resources, I share them. Look in the description of this video. I have linked all of these articles. If you'll notice at the bottom of each one of these slides, there's an article. Fidelity has an article that talks about defensive investments. Go click on the link. Go find the link in the description box and go read that article for yourself. Open up your Fidelity account, open you up a Schwab account, and get educated, ladies, so we can start making this paper. Nobody wants to work forever. The 11 sectors. See, this, first of all, nobody in the world works a computer faster than Maryland, baby. The 11 sectors: information technology, financials, healthcare, consumer discretionary, communication services, industrials, consumer staples, energy, utilities, real estate, and materials. There you go. And each one of those sectors has an ETF. And an ETF is an exchange traded fund. And so by that, I mean, let's say if in, I don't know what's in that healthcare ETF, but it's probably United Healthcare, probably going to be some, who are the big players? Pfizer, but it's a basket of stocks. So you don't even have to be, you don't have to be out here trying to Google and trying to figure out which companies. Get you an ETF. An ETF is a beautiful way for beginners to start. And don't take my word for it. Don't take anybody's word for it on the internet. Do your own due diligence. We're just here to help the people with their problems. Thank you, Meryl Love. Sharing is the only way we can make it through each day in class. Yes, we all play to our strengths. I'm trying to tell you, everybody in our learning community brings something to the table. First of all, I'm telling y'all right out my mouth, 3 years ago, I didn't know what none of this stuff meant. So I can't possibly know it all today. But there are women in that learning community that are committed. We're committed to one another. We're committed to sharing what we've learned. And so come on, get in on some of that good. Mare Love is the truth. Ain't she the truth? All right. So those are some of the defensive sectors that you might want to consider in order to mitigate some of this volatility. Had you heard of defensive stocks before today? Type yes if you have heard of defensive stocks, and type no in the chat if you have not. And let me know if you own any healthcare, utilities, or what's that other one down there? I can't see it because my thing is in there. I think consumer goods. Yes. Hey, Carlisa. Hey, love. I'm so glad you joined us. Hey, Lisa. Y'all get over there and get to Lisa J. Stock's channel. Lisa is out here. She's been beating the drum. Lisa and I work together, and we got to get back together, Lisa. I've been gone, girl. I've been MIA. For sure, I've been MIA. But y'all know I've been trying to get my little travel thing in. So, yes, Lisa was the first person that I knew who did a challenge where she was investing. I want to say it was $10 a day. Lisa, reach out. We got to do something together. Yes. So if you had already heard of defensive stocks before today, bravissimo. If you had not, now you know. You can't say you never knew. April, hey, good. Rita, yes, I'm glad now you know. Yes, I don't own them. Those companies are part of a total market ETF that I own. Yes, good point, Sam. Sam says she doesn't own them individually, and you don't have to. If you purchase a broad market like VTI, I always throw VTI out there, or VOO. VOO is is a S&P 500 ETF. It's got over 500 or close to 500 stocks in there. You're going to be diversified. If you own VTI, that's a Vanguard fund. It's got over 4,000 stocks in there. You're going to be diversified. You're going to have a little bit of everything. Yeah. So that's an easy way for beginners to get started. Oh, you own Duke. All right, sexy L. ETFs are a chunk or group of businesses, for instance, Amazon's. Yeah, you got it. All in one. You don't even have to go do any research. You don't have to do all that fundamental analysis where you're looking at the CEO and you're looking through all of their balance sheets and all of that stuff. Who has time? I mean, eventually you do want to learn how to do those things and evaluate, what's a PE ratio. You want to know all of that stuff, a PB, price to book ratio. You want to learn all that stuff eventually. But if you don't have the time and you're looking for a quick, easy way, as a beginning investor, you can't go wrong with an index fund, an ETF. And, of course, you want to be wise in your choices. I'm building my portfolio with Fidelity. Yes, yes, yes. SCHD, you got some of my faves in there. Yes. I love this for you, Rita. SCHD, we talked about that. That's a Schwab. I want to say it's the high yield dividend fund, but it's definitely a dividend fund. And all of those stocks that are in there are known for the dividend that they pay, which means not only if the stock price goes up, do you benefit, but as they pay that dividend, and hopefully, and I know you are, Rita, because Rita's in our learning community, I know you're reinvesting those dividends. And when you reinvest your dividends, what that allows you to do is purchase more stock. They're in essence paying you to buy more of their stock. It's a win-win. VTI, again, is a total market ETF, which also pays a dividend. And let me tell you something, it's nothing like free money, honey. It's nothing like when you look up, no matter what that stock is doing, whether it's up or down today, when it's time to pay out that dividend pops into your account. And I have automated that in my account. It automatically just buys me more VTI. And y'all know I love QQQ. The only thing I'll say about QQQ is of those ETFs that you just mentioned, QQQ has the highest expense ratio, and you want to watch the expense ratio. The expense ratio is what you're going to pay per $1,000 invested. So you want a relatively low expense ratio, anything like 0.3, 0.6, any of that. When you start getting to 0.50 and up, that's a little expensive, but you have to do the math and you have to determine for yourself. So I like ETFs not only because they're easy, but because they are, what's the word I'm looking for? They are not actively managed, they're passively managed, and they have lower expense ratios, which means they're going to take less of my profit in order to manage those. Hey, Nichelle. Hey, girl. Hey, girl. Hey, so glad you could join us. Hey, Aurora. Here, girl, we here. Look, we're trying to get all the girlies in the game. We don't want no problems. We want everybody over here prospering. Oh, and we've talked about this, y'all, because we've kind of hit it. I want you to consider dividend paying stocks. These are companies with a consistent history of dividend payments can provide a steady income stream, which is beneficial during market fluctuations. So even if the stock price is going up and down, you can count on that dividend coming in. And there are two kinds of dividend stock. Well, there are all kinds of dividend paying stocks and ETFs. But if you're really interested and you want something to Google, you need to Google this. Y'all need to get over to Yahoo Finance right now. Y'all should keep a tab open. When we're talking, y'all should keep a tab open. I want you to go over and look up aristocrat stocks. Aristocrat stocks are stocks that have paid a dividend consistently, and they have consistently increased their dividend over the last 25 years. Kings, I want to say there are about maybe 63, 68 aristocrat stocks. It's not a lot. Then you have king stocks. King stocks are stocks that have consistently paid and increased their dividend over the last 50 years. You know, these are blue chips, honey. They've been around for a minute. They are tried and true. And I want to say they're about 53 king stocks, maybe. And there's some overlap there. There are some aristocrat stocks that are also king stocks. There's some overlap there, but they pay a consistent dividend. And let me just give y'all this one, because I don't give no financial advice, right? I bought MO for my grandbabies, and I'm not sure. MO is either a king or an aristocrat. Child, we was still in the green. The market was clowning and doing all kind of crazy. MO was sitting up there like, not today, not today, Trumpster. No, our MO held up fairly well. It was not as affected. The only thing about that, and just for transparency's sake, MO is Altria. The ticker is MO, but the name of the company is Altria, and it's a cigarette company. So if you have any, aversion to investing in that kind of stock, if that might not be one for you. My grandbabies don't know that. They don't know. They just know that their grandmama is looking out for their future. Now, when they turn, because their accounts are custodial accounts, and you can do this too. Y'all need to be having y'all notepads out. If you have grandchildren or minors in your life that you want to start investing in the stock market, you can open up a custodial account for them. And I think an UTMA. Don't ask me the difference between the two, because I don't know. I opened up a custodial account for my grandchildren, and so you can also invest for them. And then when they come of age, I think in the state, it depends on what state you're in, either 21 or 25, they can take over that investment account. I wish it was 30. I don't want them to get to that money no time soon. I don't want them to get to that money before their prefrontal cortex is already developed. I just, I would raise it to 30, but hopefully by the time they're 21, they will have seen enough and learned enough to understand. Somebody said, okay, thanks. I'll keep an eye out on QQQ. I was going yeah. I think if I had to pick between QQQ and VUG, I would probably go with VUG. VUG is a Vanguard growth. But those are going to be affected. That VUG is going to be heavy in tech stocks too. QQQ, I think check it out. Check out the expense ratio between those two. Yeah, you just want to be mindful. Tanya says MO is also getting into cannabis area too. Hey, hey, I'm gonna sip this tea. I don't have a problem with it. I sleep well at night. If they're getting into cannabis, you ain't getting nothing out of me. I don't know if that spells good news or bad news, but for me, I'm okay with it. And, they can decide once they get older. So I want you guys to start thinking about dividend paying stocks, dividend paying ETFs. And if you don't know what those are, you need to join us the second and fourth Wednesday of the month. Roll over to, I think the link is all over it's all over the YouTube community tab. It says posts. Just go to any one of those posts, click that link. And when I tell you it's a bargain, you pay once for an entire year. Child, come on. And you'll be talking just like this in 6 months. And I'm telling you, we're doing some great things because the ladies bring up wonderful things. And let me just stop right here. I need to pause because this came up in our learning community. Maybe it'll come up. Let me just slow down because it's going to come up when we start to talk about what else you can do to protect yourself. It'll come up. Put $3 signs in the chat if you like the idea of getting paid while your money grows. If you would consider some dividend ETFs, put $3 signs in the chat, child. Put it down there. I like money. Let me put my own dollar signs in the chat. Heck yeah. Let me put that back in the stream. I got to put my dollar signs in the chat. Let me tell you something. When dividends roll around, it blows my mind every time. And you will see it. Now, stocks like Nvidia, growth stocks like that, they don't have the best dividends. Because I want to say, shoot, I think one time Nvidia might have sent me like 13 cents. But that's because their price appreciation, they're shooting up and down the chart. So you might not get, they aren't known for their dividend. So you want to do some research on some of the best. Again, check out those king stocks, check out those aristocrat stocks if you want to start to add in dividend paying stocks. If you want to do dividend paying ETFs, there's always VYM, SCHD. Ladies, drop some dividend ETFs in the chat. Those are the ones I know, the one, Steady Eddie. We call SCHD Steady Eddie. And I like VYM simply because it pays, I want to say it costs a little bit more per share. But I think the dividend might be higher. I'm not sure. But over time, I compared the two of those, SCHD and VYM. And the truth is, over time, I think SCHD has done better than VYM. But, do your own research. Don't be listening to me. Do this for yourself. I already told y'all. This is what I wanted to get to. Maintain an emergency fund. Of course, we talk about this all the time. And conventional wisdom says that you should have between 3 and 6 months worth of expenses in your emergency fund. Somebody I know, I can hear right now saying, girl, I only have 3 weeks saved. It's okay, because everybody has to start somewhere. So you're going to take small steps, baby steps. We are working people. Some of us are retired. We work for our money. I wasn't born with a silver spoon in my mouth. I can honestly say, Lord, I was out there on a limb. I can remember the days when I lived paycheck to paycheck. Hallelujah. Thank you, Jesus. Thank God for Jesus. That's not my story today. But the thought of trying to have 6 months of, expenses saved up, that was so far removed from my reality. So I get it. Start small. Save $500. Just put it somewhere. Put it in a high yield savings account. Put it someplace, because it is your emergency fund and you need it for emergencies. So you don't want that money in the stock market subjected to the volatility. You don't want to lose your emergency fund, so you don't want to put that in the stock market. You want to have that someplace that you have access to it too. And so this came up in the learning community. One of the ladies said, well, things are so crazy and my money is tied up in the stock market. I'm anxious. I want to pull that money out because I'm so close to retirement that I can't risk my retirement money during all of this madness. And I want to say it was Sam of Black Women Build Wealth. She said, well, then something that might be helpful would be to maintain an emergency fund beyond 6 months. And I know it sounds crazy, so hear me out. Sam was saying maybe you need to have an emergency fund where you have a year or 2 worth of living expenses. And I know if you're young, you're like, that child, I got things to do. But if you can, this is a goal. So start out small. Start just trying to save $500. Put it in a high yield savings account because it needs to be liquid. In case there's an emergency, you need to be able to get to it. If you can build that up to 3 months, the next marker should be trying to get it up to 6 months. And once you've got that 6 months, you can leave that in your emergency fund, in your high yield savings account. If anything comes up, that money is liquid. All you got to do is get your money. You can take care of any emergencies. But you can do something beyond that. And this is where another strategy came up. And Katrina brought this up. She was saying, Sandra, what about bond laddering? And if you don't know what bond laddering is, child, you better hit that link so you will know, because we're going to do a session on it coming up really soon. And so beyond your 6 months, I personally would like to have 3 to 6 months liquid. And, I don't want that tied up in anything that I can't get it on the day I need it. So I think a high yield savings account. This is me personally. I don't give financial advice. I'm just sharing my thoughts. Okay. So please do not come over here in the comments, FTC, FCC, whoever you are. I do not give financial advice. I am a retired teacher turned financial literacy advocate. I just share what I'm learning. I think it is wise to have 3 to 6 months of expenses where it's liquid. You don't have to cash nothing in. You just, do whatever it is, make that transfer. You have your money in case of an emergency. But if you can, beyond that, begin to, save beyond your 3 to 6 months that's liquid, you might want to consider something like bond laddering, because bonds, again, are safer than stocks. That money wouldn't be in the stock market. And you can set up your bond ladder so that your bonds are expiring every 3 months. So, if a quick emergency comes up, you can get that out of your high yield savings account. If, something, you still have this money that is working for you in the bond market, and they are expiring or coming due every 3 months. So you're making money there too. That might be where you could store up even a year to 2 years worth of savings. And so if you don't know what a bond ladder is, I told you what to do. Hit the button. Hit the button. We're here for you. I have my emergency fund at Fidelity Cash Management account. Is it safe there? I do have a debit card if I need to take it out. And let me say this, Poetry. It depends. A cash management account, there are two things. There's SPXX. We just went over this. I'm telling you, sister, you need to join us, because now you got me talking. It's SPAXX. Rita knows, because we were trying to figure out what was the difference between SPAXX. There are two ways you can store your F cash. So with Fidelity, there are two places where you can store your uninvested cash. And we were looking at the benefits of each one of those. And so here's what I would say to you, Poetry. You want to get very much educated on where your money is and how much it's paying you. I don't know if Rita is gone, but trust me, get over there to Fidelity. There's an article too that explains, there's a video as well. The Wealth Twins, I want to say, did a video that talks about the different places you can store your uninvested cash with Fidelity. Sis, I don't want to misspeak, so I'm going to put it back in your court. Do some research. Make sure that you're in one that fits your needs. Either one will allow you easy access to your money, but one is federally insured, FDIC insured, and one may not be. And I think they both pay different rates. If I'm not mistaken, one pays about 4% and the other might pay around 2%. So you want to know. And I have, a debit card, I think, is perfect for you if you want to have easy access. Something happens. You need to get a new set of tires. You do not have time to be waiting for your bond ladder to come due. You know what I'm saying? You do not have time for your bonds to expire in 3 months. That is for later. Initially, having that 3 to 6 months of emergency money available to you, liquid, means I can get it today. At best, I may have to, arrange something I can get in 24 to 48 hours, and having a debit card attached to that account. And listen to this. Y'all do know that Fidelity is a great travel card, right? A great travel debit card, because they don't charge any international fees, and they reimburse all of your, I shouldn't say all, it depends on the ATM, but they reimburse most of your ATM fees. You have to make sure that you're using an ATM that will separate your withdrawal and tell them exactly what the fee was. Because some ATMs, like here in Malaysia, they group it all together. It's just one withdrawal. And so Fidelity doesn't know what part of that is the fee, and so they don't know what to reimburse. But as long as you're using an ATM that specifies this is the amount withdrawn and this is the fee that was charged, Fidelity and Schwab will reimburse your ATM fees. Girl, this is all money. I'm telling you, it's amazing. I love seeing all those little give backs in my account. So good for you that you're using Fidelity. It's a great account. Fidelity and Schwab, they're great brokerages. Conversations with Sunshine. I'm glad you found it helpful. Now go share it with somebody. This is how we grow. It's not just for us. And y'all, it's not just about the numbers, and it's not, because first of all, let's be clear, y'all, my little YouTube channel isn't paying much yet, but it's still a little drip, a little money comes in from it. So, we do what we can, but please share this with somebody. Here's the link to join. Marilyn is on top of things. And here are the wealth twins. Y'all better get over there to the wealth twins. It's two Black sisters, two twins, and they talk about, they did a comparison between Fidelity and Schwab, and they talk about just that. I stayed with F Cash. Yes. So Rita is our resident expert on the difference between F Cash and SP. I forgot what it is. I know it's XX. It's either SPAXX. Money market pays more, but there's a risk of losing your money. So I selected F Cash until I have time to search deeper. And there you have it. And this is why you want to be in community talking, because I promise you, while I think I'm pretty bright and on top of it and I got time to read, I do not know everything. I swear I don't. Okay, so let me get that out the way. So yes, maintain an emergency fund. So when all this madness goes, or happens in your retirement account, you aren't tempted to go and cash something in because you need the money. You've got an emergency fund. 3 to 6 months is the goal. If you are getting closer and closer to retirement, you might want to consider a combination of a high yield savings account along with bond laddering. And we'll be talking about that in the coming weeks. Quick poll. How many people in the chat, how many months do you have saved right now? Type 1, 3, or 6, or working on it. If you're working on it, you're working on it. And if you feel like it's none of your business, say none of you. Either way, I'm curious. I just want us to be thinking about it. If you're thinking about it, type thinking about it in the chat. But hopefully you're somewhere on that spectrum between 1 and 6 months of emergency money put someplace that you can get to it quickly, not in the stock market. This, because that it's going to do what it's going to do. And we're not trying to go into our money that we put in the stock market for the long haul. We're not trying to touch that money. So you want to have your emergency fund in a high yield savings account. And then once you get beyond your 6 months saved up where it's liquid, you can get to it 24 hours a day within 48 hours. That's great. If you feel the need because you're getting closer to retirement, then you might want to consider some other saving strategies where your money isn't in the market, but it's still making money. And a bond ladder might be one of those things. Yes. All right. I see y'all working on it. Yes. Yes, go on, Brenda, with your bad self. I see you, Adrian. I see you. I see you, Carlisa. Okay, poetry. Huh. As long as we're doing it, we're doing the work. 24 months in a high yield. Well, hello. We salute. All right. Yes. That's a beautiful thing. I'm telling you. Goals. These are goals. Another thing that we can do, you all, and we about to wrap it up and bring it on home, is please avoid emotional decisions. Turn the news off. Turn it off. Find an alternative news source. I swear to you, when you look at them side by side, you're going to feel the difference in how they even present the news. It's crucial to adhere to a well thought out investment plan and focus on long-term goals rather than reacting impulsively to market movement. The market's going to do what the market's going to do. Do not get in there. Do not get jerked around by, this news. That's intentional. I'm telling y'all, it's intentional. Yes, absolutely. They know what they're doing. I was just rolling through my notes to try to make sure that I got everything. I want to make sure I didn't miss anything. Okay. There's some other things I could hit on, but I'll do a little recap from my notes. Can you suggest any high yields banks? Of course, we did this in our learning community. We pulled together a whole thing, but I know Marcus Sachs. I've heard good things about American Express. Go to Nerd Wallet. Go to the website Nerd Wallet and Google best high yield savings accounts for 2025. They'll give you a list. I'm good right now for at least 6 months. Anything longer, I'll have to tap into my son's college savings. Well, you got 6 months though, sis. You can work a whole lot of things out in 6 months. And so that's a beautiful thing. Yes, please join us. We meet the second Wednesday, the fourth Wednesday of every month from right now, I think it's 7 p.m. Central to 9 p.m. We have speakers that come. Sam of Black Women Build Wealth. She was just a speaker with us. Who else has been there? Dr. Roche. Mm, I know I'm gonna forget somebody. Oh, Allison, the asset maven. And we have Tamika Flowers coming up at our very next session. She is a social, I think she combines social work with money management skills and wealth building. And so she talks more about mindset and how to set up good habits and stuff. And so she'll be joining us at our next session. We have a book study component that we always do. We are constantly looking at those two platforms, Fidelity and Schwab. And we talk about all manners of money, just Black women in there doing what we do. American Express high yield is really good. Yep, yep, yep. And so the ladies, ask the ladies in the chat, if you have a high yield savings account currently that you're pleased with, do you mind dropping it in the chat so we can share with our friends? Please go to nerdwallet.com. They are a credible source. They will give you some information on high yield savings account. Just put it in their search bar, best high yield savings account for 2025. And there it is. I think you can tap on that link. And see, I don't know about raising, but hey, there you go. Check it out. Please always do your own due diligence. We are a community of Black women, like-minded Black women who have come together to share our knowledge share, and support one another and hold one another accountable in terms of our finances. I don't know for sure if there's anyone in this chat who is a certified financial advisor. And so with that being said, please do your own due diligence. This isn't the time to be afraid. It's the time to get educated and take action. Check out the Trinity study to learn about bonds in your retirement account and how it affects how long your money will last with the, ooh, thank you. Okay. Yes. All right. Did y'all catch that? Y'all better catch that. All right. Thank you for sharing, sister. Please sign up to join us. Okay, now let's be honest, because this just us chickens here. Have you made an impulsive move with your money during the stock market madness? If you, it's okay. You could just raise your hand. If that's not you, you can type in the chat. Not me. I'm steady Eddie. I held on tight. I understand how the game is played. I'm in it for the long haul. Type not me. But if even if you thought about it, you could just raise your hand. It's okay. It's okay because we're all afraid. We were all afraid. It always feels like Chicken Little, like the sky's falling, but we've been here so many times before. Don't be afraid. Don't be in that camp. Be in the camp of when those folks are afraid, honey, we go fishing. We try to, yes. Yep. I get it. Long term. I get it. Yep. Only can say it's not me. Not me. Long game. That's what I'm talking about. Yep. April, you are not alone. Yep. Yep. I get it. Mm-hmm. Mm-hmm. Yes. Because I didn't know what I the song is funny. Not this time. The code, and that'll teach you. You only have to do that one time. Pull that money and then watch that thing rebound. It's a painful lesson, but it's a good one. I'm so glad you held back poetry. I'm so glad. Good, Nicole. Yes, yes. I'm so glad. Yep. I think all of us have probably fallen for it. I know I did when I was younger. Yeah. Yep. But if you are a long-term investor, you understand now how the game is played. It is going to dip, it's going to recover. I want to say from every dip, the market has recovered with a higher high. Now, how long is it going to take? We don't know. Where the bottom is, none of us knows. None of us have a crystal ball, but we want to be on the lookout. Looking for the dip. Yep, there it is. All right. Protect your coins, ladies. Get out there, be wise with your money. You want to make smart, confident financial decisions? Subscribe to the channel, like, share. We're going to be sharing all this good stuff here. I'm going to try to do a weekly video, just trying to keep up because this Trump madness is, it's got us, I had us all a little shooketh. So I'll be trying to keep up with that. If you can, join the 1,000 Black Women Brokerage Account Challenge. I don't normally do this, but if you go to the site and you see if you're having a financial challenge, because I know it's challenging. Eggs is $13 a dozen. Eggs $20 a dozen. I understand. We all have financial challenges. If you're having a challenge, but you still want to join, send me an email and we'll see if we can work something out so that you can at least get into the community, and then we can work something out with how you can pay or finance your membership for the year. And that is it for now. Anybody got any questions before we get up out of here? Because y'all know what I'm about to do. I'm about to hit these Kuala Lumpur streets. When I tell you the sisters have been pouring through here, I have playmates every day of the week, y'all. It's a wonderful, wonderful life. So if you're thinking about coming to Southeast Asia, please pull up. Please pull up. Come on, come and see us in Kuala Lumpur. We are a good time. And it won't break the bank. It really won't. Mara Love, thank you so much. Love the title, Protect Your Coins. Yes. It is our job to protect our coins. Nobody is going to do it for us. And the way we do it is by being informed and by having a plan and then working that plan and staying with that plan. You're welcome, Key. You're welcome, Zakia. That's my sister. I'll watch your other travel videos. Yes, girl, come on. Come through. Fall through. Yes, Mimi is, well, I can't be giving away everything, but yes, I got sisters here with me. Yes, and when we get outside, we enjoy each other's company. Please, Lindsay, come check out KL. Yes, love you more, sister. Please, Michelle, roll it back. Hit the replay. You know how we do. Thanks, Mira Love. All right, y'all. And I'll be joining my sister, Natural Ally D, on a podcast coming soon. So you guys get over to her channel as well. And let me just shout out our YouTube content creators. Big up yourself. Y'all better get over there right now. Please go like, subscribe, and share her channel. Maya, I'm not sure if Maya has a channel, but she should have a channel. I think she is doing something. Natural Ally D, please go love and support her. Voyager Collective, this is my sister friend, my travel sister. You all go check out her channel. If you want to just be in your Zen space, hun, she's serving it up. I didn't see D in the chat today of H&D Abroad. Please, if you're thinking about moving abroad and you have a family, she and her husband, Herman, they put out great content. I'm just rolling through. Know Before You Go is our asset maven. Hey, love. We talked to Sam was in the chat. She is Black Women Build Wealth. And I'm just going to find her comment so I can pop her up. You all forgive me. I'm just rolling through. I want to make sure that we shout out our sisters. I don't know if Conversation with Sunshine, that sounds like that ought to be a YouTube channel. I don't know. But if it is, that's a great YouTube name. Where is, I was trying to find Sam's comment. It was up earlier. Here it is. Black Women Build Wealth. She has a YouTube channel. She's got a Facebook group. She's Black Women Build Wealth across all platforms. So you all love on each other, support each other, and I will see y'all back here next week. Bye.